The latest updates on today's market trends. Global stock market faced a sharp sell-off with the major indices across the United States and beyond experiencing significant losses. The Dow Jones Industrial Average plummeted by 890.01 points, that is minus 2.08, reflecting widespread investor anxiety. The S&P 500 also saw a steep decline of 2.70%, while the tech-heavy Nasdaq suffered the most, falling by 275 points, that is a 0.56% gain that has signaling of the strong risk sentiment in the market. The Russell 2000, which tracks smaller cap stock, also dropped by 2.72%, indicating that the selling pressure extended beyond the large-scale companies. Also, the steep declines in these indices suggest that the investors may be reacting to the concern about the economic growth, interest rate hikes, or the global uncertainties. Adding to the market turbulence, the VIX index, that is often referred to as the Wall Street fear gauge, spiked up by 19.21%, reaching 27.86% as well. The surge in the volatility reflects heightened investor uncertainty and an increased demand for the hedging against the market declines. Historically, a rising SX, which is the VIX index, is associated with the periods of the financial stress and the sharp of the increasing, suggesting that the traders expect further market instability in the near term. The market downturn was not limited to the United States, as the global indices followed the suit. In Canada, the S&P TSX Composite fell by 378 points, that is minus 1.53% of decline, while the S&P TSX 60 lost 1.35%, that is the declines that indicate that the weakness in the North American equities is widespread, likely driven by the concerns over the inflation, central bank policies, or geopolitical developments. South American markets were also affected by the Brazil's Bovespa index that slipped 515.25 points, that is a 0.41% decline. Meanwhile, Mexico's S&P BMV IPC recorded the largest percentage drop among the Latin American indices, tumbling by 1,112.75 points, that is a decline of 2.11%, signaling investors and pullback of the major leaders. The Childs S&P IPSA index experienced a more modest decline of 7.42 points, that is a 0.110%, suggesting a relatively more stable market environment compared to its regional peers. The sharp declines across global markets indicate a widespread risk of sentiment, with the investor potentially reacting to macroeconomic concern such as persistent of the inflation that fears the higher interest rate or geopolitical tensions in the society. The sharp rise in the VIX suggests that the market participants expected continued volatility in the coming days. If these trends persist, the central bank and the policymakers may face increased pressure to address the investor concern and restore the confidence in the financial markets. Commodity markets saw a broad decline across the energy, metals, and agricultural sectors, reflecting investor caution amid the ongoing economic uncertainty. Crude oil prices experienced a modest downturn, with WTI crude oil falling to 0.47% to $65.72, while the Brent crude oil that dropped 0.35% to reach $68.55. The decline in the oil prices suggests a potential easing of demand, possibly due to concerns over the slowing global economic growth or increased supply from the oil-producing nations. Additionally, fluctuations in the geopolitical events and OPEC plus production strategies could be contributing to the price movement. Natural gas saw the steepest decline among energy commodities, falling to 1.45% to reach $4 to $4.3. Also, the sharp drop could indicate oversupply in the market or reduced demand due to changing seasonal factors. With the natural gas prices remaining volatile, traders are closely watching supply chain disruptions and the global energy consumption patterns. Precious metal also experienced losses, signaling a shift in the investor sentiment. Gold, that declined declined by 0.22% to reach $2,893 despite its role as a safe haven asset during periods of uncertainty. The slight drop in the gold prices may indicate that investors are moving funds into other assets, possibly amid expectation of central bank policy shift or rising bond yields. Silver followed a similar pattern, slipping 0.035 to $32.41, also reflecting a broader sell-off in the market metals. Also, the given silver industrial application, the decline could also point to the concerns allowing the manufacturing activity or weaker industrial